Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Friday, May 5th, 2007, and the market's closed. So let's go ahead and take a look at trading from this past week. The Nasdaq 100, the QQQQ, did close with a gain of 4 cents today. You can see here that it's got a red candle, and for those of you who aren't familiar with reading candlesticks, all that simply means is that the market closed lower than where it opened. So it opened up here around 46.75 or so and closed at 46.63. So even though the market was up on the day, it has a red candle because the close was lower than the open. Don't read into that. It really is insignificant until we look at the shorter term time frame. But what we saw this past week was that we had seen the breakout 2 weeks ago past this level at $45.60. Had a very nice rally, and then on Monday we kind of scared some nervous holders as the market came down and found support along that prior level of resistance, as well as the location of that rising 10-day moving average. Now, in the daily time frame, again, we've got the 10 above the 20, above the 50, and they're all advancing. So we want to give the benefit of the doubt to the buyers and be very careful when it comes to selling short. On the shorter term time frame, the 10-minute time frame we see here, we've got what looks to be, well, this sell-off, first of all, came, it made this higher high in here and then the higher low, and again on the short-term time frame we want to give the benefit of the doubt to the buyers as long as the 5-day moving average is rising. Now, of course, when you're in a sell-off like this, there's going to be good opportunities for intraday trades, but as far as overnight positions, I think you want to generally trade in the direction of that 5-day moving average. Now that it's flattening out, it might mean that the next time we get a little bit of a sell-off and break of support, it might pull back a little bit deeper. So we have to be defensive in here as always, but I think the level of support that's really going to be most important in the short term is about $46.40. You can see that level's been tested a couple times, once today and again on Thursday. And it's also the location of that 5-day moving average, which again is flattening out. So if it breaks down through there, look for that 5-day moving average to potentially act as resistance, and then maybe we see the market sell off a little bit further, perhaps down towards $46 a share, or it's 46 or so. I don't want to read too much into that or look at the look at breaking trend lines and that sort of thing, but I think 46, maybe 46.10 or so could be an area where the market comes down to, and maybe it gets a little bit more serious. We'll see, but typically in an uptrend, the 10-day moving average acts as support a couple times, and then the pullbacks get a little bit deeper as people get more nervous, more people are looking to lock in profits, the buyers back off a little bit, and it might pull back down and find support near, not necessarily at, but these moving averages do tend to act as a magnet for the market, it tends to be next after the 10-day moving average breaks that the 20-day moving average will often act as support. And remember, that's a moving average, so it's going to be rising up too. So perhaps it's going to meet the market at that $46 level, maybe come in a little bit below 46. We'll see. I don't want to read too much into it for right now. Let's take a look at the inverse Nasdaq. That is the QUID, the QID. This is the inverse, double inverse actually, Nasdaq 100, meaning that whenever the market advances 1%, in theory, these are supposed to go down 2% and vice versa. So when the Nasdaq loses 1%, the QID is supposed to gain 2%. And you can see that the people who've been bearish on this market have been losing twice as much as they would had they just been in the regular short position. So these are very appealing to get some leverage or to use a bearish bet in a retirement account or something where you can't use margin. But right now, these things are in a downtrend. They're guilty till proven innocent. We've got a declining 10, 20, and 50-day moving average. A lot of people trying to hedge or whatever they're trying to do. The fact is, these things are going down, and you're wrong. Now, there's a possibility that we're seeing this MACD diverge in here, and perhaps that's a reason to think that maybe the next move above that 48 level could lead to maybe 49.50 or so. But again, it's the inverse of the Nasdaq, so that would make sense for it to get back up to that level. If you're a very aggressive trader, maybe you want to look at that. But generally, this market's in a downtrend, so it's guilty till proven innocent. You're better off trading with the trend. The spiders, SPY, these guys close with another gain on this weekly chart. In fact, let's take a look here at the monthly time frame and back it up a few more months. And on a monthly basis, the old high, closing high, was 52.34. So we're still not there yet, or actually close was 52.34, right? So we're not there yet on a weekly closing basis. But this market clearly is an uptrend, and records are just for the record book. That doesn't mean, it really doesn't mean anything. The S&P, though, closed with a gain of 0.38%, so it did outperform the Nasdaq by a pretty good margin with its gain of 57 cents, and just continues to add to these gains in here as the 10-day moving average also acted as support in this market. So as far as where's resistance, that's anyone's guess. We've got the potential for resistance back here from these, these highs, these all-time highs at 153.5 up to 155.75 or so, but that's only potential resistance. Where the market stops is anyone's guess, and right now the trend is clearly higher. As far as support, I think your best level right now, let's take a look here. Let me get this horizontal pen and just say that I think this continues to be the best or most important level of support in the short term is about 49.75, 49.80, and that's about where this 5-day moving average might meet up with it as well. But we do have a rising 5-day moving average, so we still want to give the benefit of the doubt to the buyers. Breaking below this level might even be something that even more aggressive traders might take an interest in. Below 150.30, that might lead to this move down towards this area, towards the 5-day moving average and this prior level of resistance. But right now, there's nothing to indicate that this market is turning around. Yes, the trend is extended, but it's an uptrend, and the only thing that pays is price. If you're selling short based on anything other than price action, you are absolutely wrong, and you've got the losses in your account, I'm sure, to prove it. And I don't say that to pick on anyone. I say it because the fact is, in an uptrend, the market is innocent till proven guilty, and to trade against that primary trend just doesn't make any sense. The semiconductors, this group, they had been in that frustrating range of 33 to 36. We saw the breakout 2 weeks ago. We've got to pull back right down to that rising 10-day moving average, and earlier in the week I said getting above $37 a share is where the buyers, in my mind, would be in control of the market, and that continues to be an important level of support now because it had been resistance. It's nice to see that we've got this 5-day moving average creeping back up again. We've got a little bit of potential for resistance at about this level here, which is 37.65 or so, but above 37.65 we're again at multiple well, not multiple year highs, but we're still moving in higher territory from this move here. And again, I'm going to point out that this is a very significant breakout because it had been in that range for such a long period of time. One way to come up with a target is to take a look at the measure the height of this range that it was in, which is 3 points, and we add that 3 points to the breakout level, which is 36, and that would indicate a target, in this case for the semiconductors, SMH, up near $39 a share. Which it looks like that's where we've had resistance early last year as well. So maybe they're headed up towards 39. I'm not putting out any price objectives or targets, but it looks reasonable to me that it can make it up towards that $39 level. I still think there's a lot of disbelief as far as this rally goes, and the short sellers just keep getting run over, each and every day, it seems like. The mid caps, the IWM. The Russell 2000 rather. These guys kind of gave us a little bit more reason for concern earlier in the week because the 81 level had been important as far as resistance goes for better part of about 2 months in there, and then it found support like it should have on this first pullback, but then it came down and closed below that. Fortunately, on Tuesday, I had pointed out that a lot of times those turn out just to be false little moves, just to break it below that obvious level, and that we still wanted to give the benefit of the doubt to the buyers because we had a rising 10, 20, and 50-day moving average. So the market did recover nicely, in fact, very nicely. You can see it came back all at once. So the people who sold short down in here or threw their stocks away were quickly regretting that, as this just turned out to be a big bear trap in here. And now it looks like this market is ready again to push out to all-time highs by breaking above $83 a share. And I think getting above $83 a share will probably good for another dollar up towards the $84 level. So all in all, the markets continue to act very strong. Short sellers are getting run over in here. But it does seem like it's getting a little bit crazy. Today, I don't know if you saw the news in this Yahoo, but there was rumors of Microsoft buying them out, and they said, no, it's not a buyout, it's a advertising agreement. No one could seem to get the story straight. But just one little speculative headline saw this stock rally from 28 and gap up to 33 and change, and then sell off. Think about all the short sellers, how they just got nailed in here. This is just a tough, tough market for short sellers. Ordinarily, this would look like a stock that should continue lower. Then you get news that came out like that, took all those shorts off guard. Just a horrible way to start your day if you're a short seller. But my point is, it seems like things are just moving based on rumor and just with little regard to any research. Not that I'm a research guy, but there doesn't seem to be much risk management or in this market. So it seems as though it's a little bit speculative, and that makes it more likely that a pullback will come at some point. But again, when we look at the SPY, when we look at the Qs, there's nothing on these charts that indicates that that pullback is anywhere near at hand based on technical action. So give the benefit of the doubt to the buyers, but be careful.